So you're trying to build your wealth. So am I, 1 week at a time by adding to my portfolio on a weekly basis. And today I'm going to take a quick look at 4 stocks that I have my eyes on to either increase my overall position because the stock prices has taken quite a hit, or just because I want to increase my overall exposure in the business. If this is your first time here, my name is Najarro. If you've seen my previous video, I'm big in the semiconductor industry. That's because that's where my education comes from. I have a master's degree in electrical engineer and used to work on the field. So that's the industry I understand the most. So let's get started. Make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. All right, so let's start off with the first stock of the day, and that is going to be AMD. I wanted to get rid of the semiconductor industry first because I'm pretty sure most of you saw this one coming. The stock from its 52-week high is down over 42.5%, right now sitting at $93. So there has been a lot of negativity kind of happening in the semiconductor industry, from things like worries of consumer spending going down, supply chain logistics, kind of over ordering, and a lot of cancellations in orders. Again, I do believe if this is happening, it's more of a short-term trend. We're still seeing strong growth in data centers, artificial intelligence, machine learning, automotive market. So even though we might kind of see some headwinds from the consumer market, I do believe there's still plenty of tailwinds in some of these other markets, which will be able to somewhat partly offset. Again, more of long-term, so dollar cost averaging for me for AMD. I mean, AMD, we can see in April 4th, they have kind of been in a nice acquisition phase. They recently acquired Xilinx, which increased their overall kind of solutions in different markets. It also entered them in things like the automotive market, right, and the FPGA market. They recently just kind of gone through the agreement of acquiring Pensando, which should close by, I believe, the second quarter of 2022. But again, this is going to add more kind of semiconductor solutions for this company and kind of getting it away from the consumer market. And that's what I like to see, right? Another thing is AMD is one that's continuing developing new products. For example, their 3rd gen AMD EPYC just kind of got an upgrade. Is their Milan Plus, which is with their 3D V-Cache technology. And within next year, we should be seeing Genoa, which is going to be their 4th generation. And their 3rd generation kind of processor kind of took the world by storm. All cloud providers have adopted AMD EPYC, and it continues to grab market share. Most recent earnings, we saw that Lisa Su mentioned that a huge growth came from the data center revenue. We can take a quick look at their last year. Revenue was up 68% from 2020. I do want to say I don't believe this growth is going to stay. So I do believe that is causing kind of volatility in the market. But I do believe this is a market that in the long term of things, in 5 years, is going to have a strong compounded annual growth rate. I want to thank the Motley Fool for sponsoring this video, and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service. So what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. All right, so that's enough with the semiconductor industry. The next stock we're going to take a quick look at is Shopify. This is one that I want to call it a toolbox for not only, I want to say, your entrepreneur, and I do believe the entrepreneur world is kind of increasing right now. Everybody wants to start an e-commerce store. Everybody wants to have some form of e-commerce solution. And Shopify has created the ultimate toolbox. I personally have kind of started my phase of learning more about the e-commerce market. And every time I go on YouTube and type in how to start e-commerce, you usually see a how-to Shopify video, which I think just shows where the overall market is. We can see from its 52-week high, the stock is down about 65%. One that has taken quite a hit. But I mean, if we take a quick look, this is a company that every single year continues to expand their platform by adding new solutions. Again, this is the one-stop shop that does everything from payment, capital, marketing, analytics, apps, inventory, order management, shipping, and they have numerous kind of integrations with other applications. If we take a look at their most recent year for 2021, they grew 57% their revenue. If we take a quick look at the most recent quarter 4, we can see strong growth in both merchant solutions and subscription solutions. So again, this is a stock that I'm really into the overall digitalization of the world. I do believe the entrepreneur spirit is still pretty strong around the world, and we're going to continue to see companies and individuals continue to use Shopify with the huge vast of tools they have in their toolbox. The next two companies I want to say are a little bit different. Many people might think, hey, Jose, you're a growth investor. You don't really focus in some of the big players, and that's not completely true. I do focus in a lot of big stocks, and I do believe these big stocks have still plenty of room to grow. So the next two I'm going to take a quick look at is Microsoft and Alphabet, also known as Google. So if we just take a quick look at their forward EV to EBITDA ratios, I do believe they are sitting at somewhat attractive levels compared to where they've been in the past. Stock prices have definitely pulled back. We can see Microsoft from its 52-week high is down over 18%. And if we take a same look at Alphabet from its 52-week high, the stock is down about 16%. So not down like the rest of the market now, but I do believe this is the time for me to kind of start accumulating some of these big players as well as some of the other growth that I'm seeing. Obviously, both Microsoft and Google kind of have consumer players. I mean, Microsoft has the gaming market. They also have kind of consumer software from their PCs and other kinds of products within there. So the slowdown of consumer spending is likely one of the causes where we're seeing a decrease in Microsoft's stock price. Again, in the long term of things, with Microsoft, you have their most recent revenue grew 20% year over year. Their net income also grew 21% year over year. They are a strong player in the enterprise, $15.9 billion of that last quarter, and that was up 19%. Revenue and intelligent cloud was $18.3 billion, and that was up 26%. So those two markets don't really have to do too much with the consumer world, and they're still growing at impressive levels. Now, when you kind of take a quick look at their more personal computing, obviously, this is probably the biggest worry right now with consumer spending, with inflations, with interest rates. We're going to see consumer spending going down. But again, they have solutions in other markets that make it for me pretty attractive. Outside of that revenue, gross margins continue to grow and operating income continues to grow as well. So not only is this company making more money in revenue, but they're also improving their margins over time. So I do think Microsoft right now is looking pretty attractive for the long term of things. Remember, more of dollar cost averaging mentality for me. If we take a quick look at Google, again, this is one that deals a lot with consumer spending. To some extent, right? With businesses, if consumer spending slows down, that means businesses might kind of slow down their advertisement, which is going to kind of reduce the amount of revenue that might come from Google's advertising segment, right? And this is the biggest portion of this company's total revenue. At the same time, this is one that has very, very high margins. So it's not something that I would worry about in the long term of things. Again, this might just kind of create more volatility, especially more negative downtrend in the short term of things. But for me, I enjoy that kind of dollar cost averaging because I'm honestly not good at timing the bottom. I wouldn't know when that's it. So for me, that dollar cost averaging mentality. Another thing, I mean, they do kind of have other enterprise solutions, their Google Cloud, even though that one's still not making money for it, it's still growing at impressive levels. And I do believe in the near future, not in the near future, but in the future 2-3 years, this is going to be a very, very important segment for Google. So those are the 4 stocks I'm planning on adding. I would like to hear on the comments below, what are some of the stocks you are kind of thinking of adding into your portfolio? If you enjoyed this video, make sure to hit the thumbs up and see you guys next time with more semiconductor talks, more just kind of talks in the tech, and take care, have a good day, and see you next time.